This trading indicator automatically plots supply and demand zones on your chart on multiple time frames. It can be used to spot market reversals and good areas where there's a large amount of buyers and sellers. The best thing about this indicator is you can have it detect these zones on multiple time frames, including the 5-minute, 15-minute, 30-minute, 1-hour, and 4-hour chart. To access this indicator, get a FluxChart subscription and search for the MTF supply and demand zones indicator by FluxCharts. Once you've added the indicator to your chart, there's a couple settings you can play around with. First is the method. This will help you determine what method you want to use when detecting these supply and demand zones. We've developed two different methods, including an adaptive and basic method. Both of these methods can be used on multiple time frames, and they can be used to spot potential market reversals and areas where buyers or sellers are stepping into the market. For example, over here, we had a retest of this supply zone, and then the market dumped past this demand zone, and it dumped all the way almost perfectly to this demand zone that we have formed earlier. And you can see price then reversed, and then it happened again and price reversed, and we finally broke the demand zone. This was a very strong demand zone, as it was a 5-minute, 1-hour, and 15-minute time zone. 3 time zones forming this demand zone made it an extremely strong area to enter trades. With this indicator, you can also get alerts for the new zone formations, zone breaks, and zone retests. So you don't have to be watching your charts all day, because you can get a notification to your phone or an email that lets you know that there's been a new zone formed or that your zone's being retested. This allows you to not have to watch the charts all day. Another great thing are these retest labels for when your demand zone or supply zone is being tapped in again. This will allow you to look for some potential entries in the market. For example, here we got a retest zone, and then the market slightly dumped, and we got a few more retests. However, this zone ended up being invalidated just by almost a wick before dumping again. There's 2 methods you can choose for determining your zone retests. You can have the low or high of a wick entering the zone and then exiting it, or you can have a close in the zone, which could potentially mean it is a stronger retest confirmation. You can also do the same with zone invalidations. Some people only like to consider their supply zones invalidated if there is a close above it, because sometimes price will wick out and then it will instantly reject. Now, you're probably wondering, how can I use this indicator to my advantage? Because it's always good to use higher time frames when trading for confluence. So, for example, right now we're on the 5-minute chart, and you can see at this demand zone, which is a 5-minute, 1-hour, and 15-minute. So we have the 1-hour and 15-minute, both higher time frames. This is indicating that there's a lot of demand in this zone on these higher time frames. So if there's high demand on higher time frames, it's likely that on the lower time frame there will also be demand there, which is why both of these areas were great entries for long positions. Another good way to use these levels is you can find potential areas to take profit in your trades. So here's an example. We had a huge demand zone formed on the 1-minute chart, and then we entered it and we got a retest label, and there was a supply zone here which was pretty small. We could have used this supply zone to trim some of our profits in this long position. You can also combine some price action concepts to take advantage of the zones. For example, here we had an entry into the zone and then another entry creating a double bottom, which is a trading pattern. So if you combine that trading pattern with the demand zone you're already in, it adds confluence to your trade, and you can be confident when entering this long position. The zones also allow you to control your risk when entering trades. In this example, we enter the demand zone on the 1-hour and 15-minute time frame. We can just set a stop loss when we enter this trade. We can set a stop loss to be a close below the zone. If we were targeting the closest supply zone, we could have had a 1 to 8.5 risk to reward ratio, because we were using these zones being invalidated as our stop loss. So you can find some really high risk to reward trade setups using this indicator, and I think it's extremely helpful as well. If you'd like to try out this indicator, make sure to head over to fluxcharts.com. You can try our indicators 7 days risk-free. We have a whole suite of trading indicators that are built and designed to improve your trading and to help you see the markets in a better and clearer way. Thank you everyone for watching, and I'm going to see you all in the next video.